Take the discussion on market forward with Santosh Singh joining us from Motilal Oswal Asset Management. Santosh, afternoon. Good day to chat with you because all the insurance companies are doing very well in trade today, most of them. I want to understand, this is a beaten down space, SBI Life, HDFC Life, Star Health. Where in the insurance pack do you see really deep value? Because in the past cycle, and your style is that you always like to look at a company or a stock when it is going through a good company, going through a bad patch. That's where the margin of safety is highest. Do you like them anywhere? Anything you like there? Not
So
stocks, but category.
if you look at the entire insurance space, actually, it's becoming deep value because and it has become deep value after the budget, right? Because in the budget there was some announcement on life insurance, and after that the stocks fell significantly because the market has assumed that the business model is now broken because there was a sort of a tax hike on a particular sort of product. So my view is that see, if the industry was dependent on just a rate hike, then when stacks break, then this industry should not be there or even not exist. But that's not the case. If you look at the numbers and what the companies are guiding for, they're still guiding for 10-15% or more than that growth rates, right? And this is despite the fact that they had a phenomenal March. Uh, so I think this segment and so life is quite good value, and then health is that's the area I'm much more bullish on, more than even life insurance, because I believe India has to go through 10 years, 15 years of sort of change in the way we think about our health. Right? The cost of your sort of treatment is going up, and it's going to get difficult to pay it from your own pocket. So health insurers are going to be sort of one of the sort of most attractive segments in the market. So I think both the segments I find a lot of value in.
Tosh, consumer finance, in fact, consumer financiers is something also I'd like to understand from you. The way commentary of Bajaj Finance came in, good growth, but the stock was already doing well going into the results. Also, the way Poonawalla FinCorp management is guiding for 35-40% growth. Where is this growth coming from consumer financiers and SME financiers in your view? No stock specific, but I want to understand this category doing okay?
See, if you look at the entire financing space, the only area which is doing well is personal finance, right? Because corporate is going through a rough patch from the financing point of view. Because today it's not the banks don't want to lend because a lot of corporates also don't want to borrow, and they will only start when the capex cycle starts to sort of show a lot of traction. So personal finance is actually doing very well, and most of the non-bank finance companies, including the names you talked about, are in that particular segment. They don't do corporate, they don't do infrastructure, and that's doing well. And what these companies are also doing is they're innovating, right? They're increasing the sort of their areas where they used to sort of operate. Because the old NBFC business model used to be more about doing one thing and doing it very well. But over a period, it has evolved that you are doing multiple things, and in certain things you are the best, and in other areas you can be better than the average, and you can still do very well. So this is why this particular segment of the market is doing pretty well.
Sure. What about, you spoke about capex. Have you been adding some of these engineering companies, manufacturing companies, especially engineers and manufacturing kind of companies in your portfolios? Also, otherwise, where have you been looking at adding positions in the last, say, couple of months that market has been?
So actually, if you look at the area where I've been incrementally most bullish on is IT, because I believe the markets have given up on IT. They're just thinking, and after Infosys result, it seemed like that everything is over for the IT sector. But my belief is this is one sector which is structural in nature. I think digital innovations are not going anywhere. There are concerns that Chat GPT might disrupt the market. I think any digital innovation only increases the work of these IT companies. So over a 10-year period, they are going to give you sort of very good growth. Yes, but what this has done is the valuations are now much more, I would not say even palatable. They have become a lot attractive because a lot of these companies are 3 to 4% dividend yielding companies now. So in India, if you find a 3 to 4% dividend yielding companies with sort of long-term growth rate in excess of 10%, then I think that becomes one of the most interesting or most attractive area to be in.
Like in IT, because one is the large cap IT pack, then there are persistent KPIT, LTTS variety where growth commentary is coming out very well.
Yeah.
Margins are quite nicely intact at 23-24% in many cases. Which pocket do you see better risk reward?
If you ask me today, I say risk reward to being better everywhere in the IT space, be it services, be it the product companies, right? The product companies have done better than the services company in this quarter, and that's why you're talking about the companies you mentioned are the product companies. But I think be it the services or the and then those product companies have a particular sort of area of manufacturing which is doing very well, which is the EV transition. So which is doing very well, and that's getting into their numbers. But if other than if that's the one sort of that's one trend. But if I look at overall, right, I'm actually quite bullish on the entire IT space. I will sort of be it mid cap, large cap, anywhere. I think I'm quite sort of interested and quite attracted towards this.
All right, Santosh, we'll let you go today. Short interaction because of huge, hectic earnings flows, but I always enjoy chatting with you. Thanks so much for your time.